Hello, this is Pat Walker at Mission Winners, making a video, an educational coaching video for everybody. My background, years ago I taught on the university level. I taught advanced level classes, periodically even taught advanced level statistics, sometimes on a graduate level. And I love teaching. I've taught different things for years, whether it be outdoor survival skills at higher elevations, how to build a fire pit. You can go, that's kind of crazy. No, all different kinds of areas. But one of the areas that I really enjoy is helping people in the area of investing. I started Mission Winners several years ago. And Mission Winners, mission is an acronym. Markets, industries, sectors, stock, institutional support, outstanding management, outstanding product, outstanding services, and the N in Mission Winners. And to me, this is very important. I credit to my son. Never say never. Never say never. Mindset. So that's mission, Mission Winners. Notice what letter comes first. The M, the markets. And the point here is this. If the market's rough, acting crummy, I'm keeping it clean, by the way. If the market's acting crummy like it is right now, what do? Well, you know what you do? This is what we do. We wait. A lot of people sit there and they're always looking for something to do. Very important point. Please never equate activity with profitability. The two are mutually exclusive, all right? Just because you do something, there is not a 100% guarantee you're going to make money. Good activity, good tactics, that's what sets us apart and what can set you apart. I'll also share this with you. Market, here's the spiders right here. This is wicked, isn't it? Look at this. This can impact your life. But I'm going to tighten it up here a little bit and show you something. Look at this nice trend. September moved up, pulled back. September, October. Moving averages. This is the 200-day, the purple. This is the 50-day. This is the 20-day simple, 50-day simple, and this is the 8-period exponential moving average. There's a couple of years of work in that moving average, by the way, how we determined it with another guy who trades out in California. So, and invest, and he's very, very good. So what do we do here? We watch these moving averages, but I'm going to take it a step further. You have to have some rules and tactics, and I'll share a couple of them with you. Focus on leading stocks in leading groups. Focus on stocks that have either great earnings and or great sales. They are within 15 to 20% of 52-week highs. No low price stocks. They have a great product or service. Last quarter's earnings up 40% or higher. Or the average sales growth for 2 quarters is 40% or higher. And the higher the number, the better. No low price stocks. No stocks that trade thin, that trade less than 200,000 shares a day. They're above the 50-day. If you take those constraints, you will increase your potential to make money. You've stacked the deck in your favor. It's a statistical fact. It's not an opinion. Research shows it. So why not use that mindset? Use that data. Use that foundation to find new stocks. Another point I'll make, I encourage you, turn off the noise that's out there. It can get really confusing, folks. Oh, I got to look at this. I got to look at that. Oh, boy, look, he's talking about that one. Oh, God, look at this. No, it can cause you to lose focus. It can cause you to lose track of what you need to do. I don't subscribe to a bunch of newsletters. In fact, I don't subscribe to any. And I'm not knocking them. Please don't take that, okay? That's not the way I mean it. I just want to focus on what I know works. And this I know through 30 plus years works. It works. Great stocks with great numbers, with great charts, in great groups, in good markets, and you've set yourself up for the potential to make good money. So we're looking at the spiders right here. I'll also share this with you. A lot of people think, oh, I got to do this, I got to do that. No, do what's right. Do what's clean and simple. Look at this nice trend on the spiders, as we pointed out. Isn't that great? But we're going to take it a step further. I'm going to show you two stocks that basically helped make a major chunk of the year. All right? Right here. First one, GSX. Look at this move. Entry 1782. Do we still own this? Yes. Yes. See that nice long base? I'm going to do something for you. A lot of time when people look at charts, they look at stuff after the fact, and a perceptual bias can enter into your thought processes. So what are we going to do? And by the way, you can see, where do you get that from? I've got a degree in psychology too, so I use it. Put it to work. And you don't need a degree in psychology to do this, okay? But I will tell you, there are a ton of emotions in charts. There's the emotions of fear, greed, panic, complacency. They're all reflected in the charts. And you don't need a degree to know that. You can just see it in the charts. Look at this. I'll show you something sweet. We'll drag this over. Nice long base. Just going sideways. Look at this bar. I tell this to people. People talk with their mouths and vote with their pocketbooks. You see that bar right there? Guess what? They voted. They voted on that sucker. Big time. Right there. Nice long base. Now, remember I talked about having great earnings and or great sales? The quarter before this stock broke out, GSX had sales up 441%. It was in a leading group. So now we've stacked the deck in our favor. We've got a nice long base. We've got a stock with either great earnings or great sales. It was in a leading group. It has a volume trigger right here. Look at that. It hadn't broken out yet, but boy, that's sweet potato pie right there. And here's what we do. Advance it one day. Look at this. Look at the volume pickup on that bar. It's huge. In relation to average daily volume of about, what are we looking at here? Average daily volume around 450,000 shares a day. On the breakout, this stock did 1.16 million shares. 1.16 million? That's huge. Nice long base. Look for a base that a fifth grader could see, a fourth grader could see and say, well, it's going sideways. I guess if it pushes through the top, that'd be really good to do, Mom and Dad. Look for that. You can say, why would you want to do that? Look for bases that everybody can see. It increases the potential that they'll act on it too. Years ago, I had a buddy of mine call me from California. He's a trader, another guy, okay? I'm going back a long time ago. He actually worked on a trade desk. He says, Pat, I found a chart pattern that's awesome, man. This thing can lead to some great gains. So I said, well, tell me about it. So he tells me about it. I said, well, do other people know about it? He goes, no, I'm the only person that knows about this chart pattern. So I said, so Robert, what you're saying is you found something that nobody else knows about. Yeah. And I said, so if they know about it, if they don't know about it, do you think they'll buy? Well, no. I said, so what you're saying is you got something that nobody knows about, and if nobody knows about it, that means they're not going to act on it if it breaks out, right? He goes, yeah, I guess not. I said, that's not good. Look for chart patterns that are easy to see, that everybody can see them and act on them. Oh, okay. There you go. So here we go. Just clean and simple base. By the way, a lot of people say, oh, look for the cup and handle. That's fine. But if you wait just for cups and handles, I'm going to tell you something, you're going to starve to death. There's a couple other patterns. Clean and simple flat bases. Look for stuff like that. You'll go to town. I promise. It's what we do. It's what we've done for decades. Going sideways. Pushes through. Sweet. You're in it. So you're in it right here. Our cost on this is $17.82. I'm looking at the trading platform right now. Does this. I'm going to enlarge this a little bit now so it's easier to see. It's hanging in. Pulls back a bit. Comes down. Got to come close to the pivot. Right here. Right? But notice this. Volume picks up, but it's nowhere near what it was on this bar. All right? We're in fine shape. Starts to pick up. Look at this bar. What did it do, folks? It lifted off the rising 8-period exponential moving average, and it did it on a pickup in volume. That's sweet. That's what we want. Inside bar, above the 8-day. Bounces off the 8-day. You're fine. Starts to pick up on a pickup in volume. I'll enlarge that just a bit so it's easier to see. See this? And again, our cost on this is $17.82. Goes up. Goes up. Runs up, pulls back. Slight pickup in volume. Still trending up though. It's like, oh, sell it, sell it. Why? Don't do that to yourself. Limit losses. Don't limit profits. We don't know the future. I know this. If I'm losing money, by gum, I got to get out. But it's still working. It's fine. It's fine. Down to the 8-day. Bounces off the 8-day on a pickup in volume. Gaps up and pulls back on less volume. You're okay. Comes down to the 8-day and bounces off on lowest volume. But the trend, I'm just doing it day by day. This is a great exercise. This is what I teach. Just walking up. Comes down to the 8-day. Volume's about the same. Bounces off the 8-day on a pickup in volume. Got to share this with you. Do you think we're the only people in the world that know about the 8-period exponential moving average? No way. A lot of people know about it. A lot of people. It works. By the way, I gave you a little history here. For years, I used the 10-period simple. And then I started doing research. And Ed Seykota, who I followed, was doing commodities, and he used the 5-period exponential moving average. If you don't know who Ed Seykota is, Seykota, Google him. Had the great honor of meeting that man and talking with him one-on-one years ago. Really helped me, okay? I'm telling you. What a guy. Anyway. Oh, another point. If you have a chance, read Market Wizards. Market Wizards by Jack Schwager. Interviews with top traders. Great book. First book, great book. Second book, great book. By the way, I don't get anything from them, okay? But great books. Especially the last chapter in that book. An interview with Dr. Van Tharp, T-H-A-R-P. That book, that chapter will help you in your journey. I guarantee it. I guarantee it. I recommend that book. You guys, well, have you read it? Shoot, I've read that book probably 10 frickin' times. Yeah, it's all marked up. It's like a textbook. Back to the stocks. If you couldn't tell, I get excited about this. Looks fine. Marches up the 8. Marches up the 8. Walks up the 8. Loses the 8 a little bit, but on low volume. Bounces. Starts to pick up again. Starts to lift. Look at this trend. Now, if you want to sell a little into strength, there's nothing wrong with that. But do you sell it all? No. I'm going to share this with you too. I was there for the crash of '86 and everything else since. This is a Wall Street maxim. You'll never go broke taking a profit. Folks, I don't want to sound like a jerk, but that's a lie. If your losses are bigger than your profits, you will go broke. So it's important to let your profits work and run as long as possible. And you've got rules and tactics. Keeps on going. Keeps on going. Keeps on going. Keeps on going. Look at this walk up the 8. Is that sweet potato pie? I love that. Comes down to the 8, breaches a little bit. What could you do there? Well, sell a little bit off. You got dang near a double. Take a little bit off. There's nothing wrong with that. Gaps down. Comes down near the 20-day and bounces right off of it on a pickup event volume. You think we're the only people in the world that know about the 8-day and the 20-day? No. And they bounced it. That's sweet. Look at this. And it lifts again. Then it pulls back on a pickup and volume. Could you sell a little bit more there? Sure. Does this. Look at that. Earnings. Down to the 8. Walking. Walking. pulls back. Could you sell a little bit more? Sure, that's okay. Down to the 20. Lost the 20, but did we sell? You could if you wanted to, but look at the low volume. Wait and see what happens the next day. Does this. Look at that. Is that sweet? Comes down here, bounces off the 20-day. Folks, by the way, I've got to put this in context. This is what the market getting spanked. You see this date right here? That's February 28th. Remember that, 228. I'm going to write it down because God knows I'll forget it. 228. Advance it. Lifts. Going sideways here. We've got great cushion. This is current as of today, 311. Look at that move. Entry 1782. Trade here near 43 bucks. That is how you do it. One day, only one day did that stock close below the 20-day. There's a trend for you. There you go. I want to show you another one. Tesla. You say, wow, look at that. No, let's take it back. I called this out to the VIPs. It's a max list stock. This stock, no earnings, unbelievable revenue growth, good estimates going forward. It fits the bill. And it was in a leading group when it broke out. See this channel right here? Simple channel. It's above the 20-day. It's right above the 8-day. Look at the volume of pickups. You see that? That was talking. It's like, well, it's simple. If it takes out these tops here, goes across these tops, that could be a buy. The high on this bar was 338.86. All right? Next day, starts to pick up. We bought it. Look at the volume pickup. People talk with their mouths and vote with their pocketbooks. They voted. We owned it at 338.30. 338.30. Put it on the chart. I could pull it up, the timestamp, if you want to see it. Boom. Off to the races. Marches. Look at that volume. Is that sweet? People talk with their mouths and vote with their pocketbooks. They did. And it just marches. Closes above the 8-day. Gaps down and reverses back above the 8-day. This move, it has not closed below the 8-day. And it marches. Look at that volume pickup. Pulls back on less volume than the up bar. Pulls back on less volume than the up bar. Lifts off on heavier volume than this bar. Volume pickup. Comes down to the 8-day. Does it close below the 8-day? No, it does not. And it marches. Yeah, could you sell some into strength? Heck, fire, we own a sucker at 338. It's trading at 887. Last time I checked, that's 550 frickin' points. Yeah, you could take some off. Do you sell it all? No, we had VIPs in this. It's like you got to stick and see what happens. Pulls back. Oh, it's the end of the world. Folks, look where it stops. You sell some into strength, you're okay. By the way, this whole move, folks, I defy you. I challenge you. Find a day it closed below the 8-day, this whole move. You won't find one. Okay? I already know. Why? Because we owned it. What do we have here? We got kind of a double top, don't you? And notice this. The volume on this bar is less than the volume on that bar. What did we tell people? We told VIPs, you might want to take some off there. Sell some. Take it all? No. Sell some. Comes down, and then right here, losing the 20 right there, that's a problem. You sell more. Comes down to the 50. Finally, last share sold right here. And that's where we're at. That's where we're at. It works. It works. You let it work as long as possible. That's how you do it. I can't stress that enough. Trends pay. Trends pay. And I will also say this. We had people selling here. Okay? Here. So, just clarify. It works. Trends pay. Good entry and a trend pay. These two stocks, You let stuff like this ride, it can make your year. It can make your dang year. Anyway, wanted to share it with you, and I hope that helps you, and I thank you.